Hello ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video. Today's date is December 17, 2024. In this video, I take a look at three of the major currency pairs from a technical perspective: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. So let's get started. All right, there is a change in the picture of the euro versus US dollar. More specifically, in the Asian session, the price did move above the 200-hour moving average. This moving average was a top here, formed a peak here against its moving average on all these different occasions through here. And in trading in the Asian session, the price moved above that level. It should have led to more upside momentum, with the price heading toward the 38.2% retracement. But as you can see, it failed, and the price moved back below that 200-hour moving average, a green line in the chart. Also moved below the 100-bar moving average on the 4-hour chart, that's this blue line, and the 100-hour moving average, that's this blue line down here, pushing below that level. We are now rebounding higher back toward that 100-hour moving average as the ups and downs continue for this currency pair. Since back here on the Tuesday of last week, when the price first moved below these moving averages, we've seen ups and downs, ups and downs, ups and downs. You can probably put a little box around this area right through here and say this is where most of the price action has occurred, going back to, well, about a month ago. And yes, we did have this move to the downside right through here, moving outside of that range. We also moved below it right here, but you can see a number of different lows down here that should attract support buyers between 104.48 and 104.61 if the price can continue its bearish bias down through here. If it breaks below this level, then that would increase the bearish bias, having traders looking for the downside. Conversely, if we do move back above these moving averages, we should see a rotation toward the 38.2% retracement and then toward the ceiling right through here. Like on the downside, it did have a little wild hair right here. This is the employment day where the price moved above this area. But going back in time, even back before this red box here, you can see the number of different times where the price either found either support or resistance against this area right through here, that before the market moved to the downside. So this area is a key resistance target on the top side between 1.0592 and 1.06097. Move above that level opens the door for 50% retracement, and then other higher levels to target. So that's the euro versus US dollar. Let's take a look at the dollar versus yen next. And we look at the dollar versus yen. We did break above this this swing area right through here, which roughly was a bias defining level for both the upside and the downside through here. We finally broke below level, moved down below that level here. On trading yesterday, we tried to move a little bit above it and then rotate it back down toward this swing area through here, before bouncing back not once but twice within that yellow area. That took the price to a new high, going back to, well, this date in November 26th or 7th or somewhere around there. And then we started to see lower highs through here. Yes, we moved below the 153.88 level here, but we did hold the 61.8% retracement and above the swing area down through here, including the rising 100-hour moving average. Ultimately, if the price is going to go lower, we need to get below 61.8% retrace and get below this swing area and the 100-hour moving average at the same time. Those levels come between 153.20 and 153.459 in order to increase the bearish bias and have the traders who bought the break to the upside look to sell after the disappointment on that break to the upside. Alternatively, if we move back above the 153.88 level and start to put some more room between it and this level, we could see a rotation back toward the high, which ultimately might look toward the 154.70.9 level, or 154.709 level. That level corresponds with this high going back to this day right here. Finally, let's look at the sterling versus US dollar. We'll look at the hourly chart as mentioned in the report below. We do have the US jobs report come out, or not the UK jobs report come out better than expected. It helped to push the price higher and away from this swing area. This swing area is defined by a number of different swing lows and swing highs going back to around a month ago, a little bit less than a month ago. More recently, we've used that level as support and resistance over the last 4 or so trading days. If we broke below it, use it as resistance. If we broke above, use it as support, including today, where the price found support against this level of 126.50 to 126.70. So that was a positive for this pair. We did a move above the 100 bar moving averages, both the 100-hour moving average and the 100 bar moving average on the 4-hour chart. We're also trying to move above the 38.2% retracement of the move down from the November high right through here. Like the euro versus US dollar, we've seen a lot of ups and downs in this pair. I put the value area somewhere around this area right through here, where the price has mostly stayed in trading last week. And maybe even the week before, we did try to move above the 200 bar moving average on the 4-hour chart on a number of successive days right here, right here, right here, right here, right here. I guess it skipped this day right here, but could not maintain any momentum above that level, including getting above the 50% retracement on each of those days. But either if the price is going to go higher, we need to start taking out these levels and ultimately get above the 50% retracement and have ourselves work toward the 200-day moving average on the top side. So there you have it, a look at 3 of the major currency pairs to kickstart your trading day from a tactical perspective. My name is Greg Mikulowski. Good fortune to your trading. Bye-bye now.